72% of Indians are literate, but 24% of Indians are financially literate. This means only 24% of Indians know what is savings and what is investment. This is the picture of India today. Hi, this is Pranati, and today I am going to speak with you about investment and its importance. This video is especially intended to young viewers of age 20 to 25 who are really interested in money matters. Managing money is a very important aspect of our life, but I'm sure there are many who will tell you do not think about money. Let us analyze this. Is money really very important? Yes, it is, because with money you can buy comfort. But money is not ultimate. We really have many other things and very important things to do in life. Hence, I really don't think that we really have to spend our entire life simply to earn that bank account balance. If you don't find a way to earn while you sleep, then you will work until you die. This is a thought by Warren Buffett, and this is the thought used by many advertisements. But don't you think that if so many mouths are talking about this quote, then it is true obviously. We need to follow this, and this is what I am talking about. If you want to earn while you sleep, the best option is investment. Invest your money and see how it grows over time. This is a video which is very important for youngsters, and this can actually change your life. Now let us talk about what are the options to invest. First option, you can save a lot of money in your savings account. Now if you don't know, banks which provide you savings account also provide an interest rate on the money you have saved in your savings account. Let us see what is the highest rate of interest you can get from your savings account. This is the site called bankbazaar.com, and this says the interest rate on your savings account will range from 2.7% per annum to 6.25% per annum. 6.25%. Let's catch the highest interest rate. If I have to calculate this on 1 lakh rupees for a period of 1 year, this is the returns you are going to get on 1 lakh rupees for 1 year on 6.5% per annum. It is 6,660 rupees. Now, this is not a very good option. Why? Because do you know that there is something called as inflation? The chips packet you used to buy for 5 rupees yesterday is 10 rupees today. This is what is called inflation. The value of every rupee is decreasing day by day. Now, the Reserve Bank of India declares the rate of inflation every quarter. Now, hence, since 3 quarters have passed, the inflation rate which RBI has declared is something like this. It is 5.7% on an average. 5.7%, and the interest you are getting on savings account is 6.5%. Do you see the difference? If we go with this interest rate, 5.7%, and we have a capital of 1 lakh rupees, a rate of 5.7% for a period of 1 year, the inflation is going to be 5,700. That means 1 lakh rupees with inflation of 5.7% over 1 year would result into 1,05,700 rupees. Meaning, if you are getting an object for 1 lakh today, you will have to pay 1,05,700 rupees for the same object after a year from today. So, do you understand that the interest rate provided by the savings account is simply not significant, and you're not going to reach anywhere with that interest rate. Now, since the first option, that is savings account, is done, let us go to the next option, the very secure option, fixed deposits with banks. Now let us see what are the interest rates provided by various banks on fixed deposits. This is again quoted by bankbazaar.com, and this is the latest update from the site as of 24th October 2021. We can find in this list that the lowest amount of interest provided on FDs is 2.9%, and the highest amount is 5.75%. 5.75 is again somewhere around 5.7% of your inflation. So this is giving the same returns as the savings account of a bank. What is the next and last left option? It is investing in mutual funds. Now let us see how the mutual funds perform for the same capital in the same time. So these are the popular mutual funds, and this one we will select first since this is the most popular. So it is ICICI Prudential Technology Direct Plan Growth, and here if we consider for 1 year, the percentage return is 90.27%. 90.27%. That means if we calculate the amount, so if we have invested 1 lakh rupees for 1 year in this mutual fund, the returns you would have is 90,270 rupees. That is 90.27%. Do you see the difference between 6.25% and 90%? So what about 3 years? 186% returns in 3 years. And about 5 years, it is 323% returns in 5 years. This is not the only fund which is giving this kind of returns. In history, this is a list of 19 funds which have given about 20% returns in 20 years, and these all are regular plan funds. Now there is difference between regular mutual funds and direct plan funds, and we will see that in later videos. Do you see the difference that mutual funds can make to you? Now the next question is this safe compared to savings account and fixed deposits? Yes, it is. Why? Because there is something called as Nifty50. Nifty50 is the top 50 companies of India, and these mutual funds only select companies from these top 50. Do you really think that there is risk investing in top 50 companies of the country which account to most part of the country's GDP? Hence, I really don't think that there is any risk. Then why do people say that mutual funds are intended to risk? Because if you invest for a month or two, the company may grow or it may fall. But if you invest for a year or two, did you see any of those top 50 companies which have not grown in a year? This is the list of those 50 companies which are included in Nifty50 mutual fund. I will share the link in the description so that you can see all the names of companies, and I'm sure you will recognize most of them. Now, the mutual fund which we saw just now, also since it is a technology fund, it invests in technology based companies out of these top 50 companies. If we see the holdings or the list of companies where our money will be invested, so these are the name of those companies, and you can see the names of these companies, and they are all there in Nifty50. Now if we observe, the percentage of money which we invest will be divided into all these companies depending on the percentages which are allocated over here. Now these percentages depend on the highest performing company having the highest chunk, and the lowest having the lowest percentage. Now, do you really feel that mutual funds are not as secure as your FDs or savings account when invested for a long time? A long time is not really long. Even 1 year can give you a very good returns. What amount do you need to start this? Not 1 lakh as of initially. You can even start it with 100 to 500 rupees and pay it every month. Is it not very simple? And do you understand how much good returns this can give to you with all your savings? Now, this is the story of mutual funds. But let me tell you, this is not it. We also have something called as stock markets, where you can buy the shares of these stocks which are listed under Nifty 50 directly. There is a saying that if you know how to trade in the stock market, then stock market can give you a returns of 10 times more than what a mutual fund can give you for the same period of time. This channel is going to talk about investing in mutual funds as well as investing in stocks, how to analyze which stock to invest in, and how to know when to enter and when to exit a stock. This channel focuses on especially financial education for young people to invest your money and to earn while you sleep. I would really appreciate if you can share this video to those people who don't know anything about investment, but they can start from scratch today. I would really request everyone to share this video with all your loved ones, your siblings, so that they can get financially educated, which is very, very important, just like education today.